The markets may be closed today, but we are pushing forward. On this episode, we're going to be talking about the upcoming week in the markets. We have some new data coming out. Who knows if that data is even reliable anymore? It could all be cooked at this point. We'll dive into it further. Before we get going, please hit that like button, subscribe to our channel. Nothing we say is financial advice. We are not financial planners. We are two guys who love talking about the markets, love the game that we're playing here. So please do all of your own research before buying and selling. Kevin, you came into the pre-show fired up, ready to see the markets absolutely dump. And this could be the first week where, that happens. But the question we have to answer is, are the books being cooked, and will, the US government even allow the data to show what it actually is showing?
I don't know. I think that we saw last week that CPI actually did spike if we were using the same methodology, same mathematics that we were using for the past 8 months prior. But clearly it came in under because we used a new algorithm or new arithmetic that they wanted to do. We would have been at 6.7%. So that is a spike. And right now, no one's really panicking. No one's really doing much. Again, the markets are closed today, so nothing really to worry about until tomorrow. But for the most part, I don't know. It seems like this narrative it's transitory to the point where it's like, oh no, inflation's coming down. It's just not as fast as we thought. Maybe it lasts a little bit longer, but it's still, we're not in a recession. Inflation's coming down, nothing to worry about. So I think we're going to have to see some hard data for a lot of retail to realize that, hey, maybe this is definitely some foo on the U.S. government.
Yep, for sure. I think we'll start to see it this week. Reports coming out. We have some existing home sale data tomorrow. Wednesday is the FOMC minutes from the February 1st meeting. 3 weeks ago, they always wait 3 weeks to put the minutes out. So that should be interesting to kind of dive into those and see, what exactly they're looking at, how closely they considered a 50 basis point hike. Then on Friday, there's a lot. We have consumer spending, we have personal income, we have the PCE, so another inflation gauge. And, if we see that, if PCE comes in hot, if consumer spending is high, if personal income is high, then that's just a green light for the Fed to ratchet up the interest rates at the next meeting. I think we're trending, all the momentum is in the direction of a 50 basis point hike at the March meeting. I personally think we're going to get that. I am personally trying to get as much cash on hand as I can in the coming days out of the markets as we also have some earnings reports. So tomorrow we get Walmart and Home Depot, which is another good gauge of how the consumer's, how the consumer's health is, how, Walmart, Home Depot, those are pretty good indicators of, are people putting money, spending a lot of money still, have money to do home projects, things like that. Wednesday is the big one for me personally. That's the NVIDIA earnings. If we see a good NVIDIA earnings report and we pump after that, that is the perfect time for me to take some off the table, move it to cash in anticipation of a Friday pullback. And that is my current game plan. If we get a 5% pump on NVIDIA, which they are, I've been following NVIDIA since 2009 was when I first bought NVIDIA, and I've held for quite a while. So I've watched these reports. I've seen the cycles. A solid earnings report from NVIDIA usually leads to a 5 to 7% pump from my experience. And if we see one of those on Thursday, you bet your ass I'm taking some money off the table. That is absolutely happening. So those are some of the bigger earnings reports we got this week. It's the end of earnings season. We have more economic data coming out. So it's gonna be a hell of a week. And I think this could be, we've talked about maybe March is the month where things head south. I think this could be kind of the precursor to that.
Yeah, for sure. Again, it seems like we're at a level for a lot of things where the price keeps finding resistance. However, someone's keeping the price up at this level. So right now, I think there might be just a ton of distribution going on. And, like you said, there's tons of data coming out this week. I wrote in the show notes, I wasn't really too concerned with a lot of the data or major price movements based on the data. Sure, I think we'll see some good, fluctuation, but I still feel in my gut that it's going to end up being something similar to 2008, that week in September, where the market just got destroyed for a week straight and it was red nonstop, or it's going to be something where people are just least expecting it. We're going to go to bed one night like on a Sunday night or something like that after the weekly close, and the Asian markets are going to open up, and then everything's just going to dump, and then people are just going to be trapped, and they're just going to try and sell. But I'm not too sure when this market's finally going to go. I mean, everything's pointing towards a massive downtrend in the market, where this relief rally, it was nice and all, but at some point, not everything goes up forever to a point in a bear market. So it's just a matter of time, and I'm just patiently waiting the unexpected moment that market makers decide to say, you know what, screw retail, we're going to drop it all on you.
Yeah, I saw yesterday the Bitcoin fear and greed index is at greed. It still is today. It ticked back a couple points. Just like something interesting I like to see. Like, are people really that bullish right now? Is the market that frothy? And the answer is yes. There's still just, this market is going to get punished. It has to happen. And I don't want to see it happen, but like it is. Like, we're not out of the woods yet by any means. Like, there's still a long ways to go. And if you're not, I'm not trying to time anything, but I'm also not trying to get caught with my pants down and get absolutely wrecked. Like, I want to take advantage, and I like how I'm positioned currently, especially in crypto, with having plenty, having cash on the sideline, having my long-term holdings that I'm comfortable with, riding out, because if I'm wrong and things continue to go up, then I'm winning. And if I'm right and things go down, well, then I have cash to increase my positions in tokens that I'm very confident in long-term. So I'm feeling pretty good right now. I'm not stressed out at all, really. I just want to see all this play out. And I'd like to see the actual pain and capitulation finally come, so we can try to, like, because it's going to be a while till we're back in an actual bull market. And I would like to get to that point sooner than later, but we can't rush it. Like, and that's the problem right now, is people are tired of being in a bear market. And so they're just like, oh, we're back in a bull. Let's toss money back in the market. And the market makers are like, okay, we'll keep the prices up for now. Let's get that sense of, everyone's feeling all nice and cozy in this market, in this relief rally. They're feeling good. The market makers are like, yeah, we'll keep the prices up for a little bit. Come back in. Everything's safe. And then, boom, it's over, Kevin. So just be prepared for that. I'm not optimistic for the next year or so.
I think you've finally gone more bearish than I have. That's pretty impressive. No, I'm just kidding. I'm still so bearish. But yeah,
you were the one telling me before the show you think the TradFi markets are going down 45%. There's no way I'm more bearish than you right now.
Let's put it this way. I have an argument for why I think like 42 to 45% for those. But for the most part, I definitely see 20, 25, 30, percent. And then for Bitcoin, I even have a 69% drop possibility. Do I want it to go down that low? I don't know. I'll take anything at this point. I'm all in cash. Give me some good discounts. It's President's Day. It's Washington's birthday. Give me some Value City discounts. I want to get Bitcoin at 7K, 8K. But no, yeah, it's the outlook is terrible. Again, my main fears for going forward are consumer debt. I think that's going to be one thing that's going to just destroy tons of people. And I also think that, unemployment's going to rise. I mean, we had the lowest unemployment in 40-something years, 50-something years.
Yeah.
And you're telling me that we technically had a spike last time if we were using the same calculations that we calculated the previous 8 months of CPI data for. We got a spike. We got the lowest unemployment in the longest time. Wages are still pretty strong, and goods are still going up. I sent out a tweet, I think it was last night. It was like, if you think the Fed's going to pivot or inflation's coming down, since the beginning of January, has price of gas gone up or down? It's gone up like fucking crazy. I mean, it's. I remember it was like where I am. It was like 3.30 January 1st. Got gas the other day. It was like 4.48. So it's definitely going up. The prices are definitely going up.
100%.
And energy is 100% one of the biggest things that comes into account for calculating CPI. Maybe not now that they're using, I don't know, algebra or whatever they're doing to calculate this. But they're pretty much just taking away points off the data and just saying, maybe we just won't put the energy as so much of the calculation for CPI. That way it will make it look like it's lower. But gas is going up. Everything's going up. Goods, I mean, eggs are still not coming down. There's a bunch of stuff that's just still priced, and people are having to use credit and they're using debt to purchase everything. So it's not necessarily the best bullish case that people are going to have cash on hand. I think they just have debt on hand.
Yeah, 100%. Like, I don't know how many times we need to say this, but if you are still not living below your means, you are just playing this thing entirely wrong. And I don't think you're going to be very happy in the coming months. Like, now is not the time to try to live the IG influencer lifestyle and put it out there that, you know, everything's all sunshine and rainbows. Like, batten down the hatches, tighten things up a little bit, and put that money to work for you, because there's never a good time to be financially illiterate, but now is a really, really bad time to be financially illiterate. So like, learn these things. You know, it doesn't need to be in super risky stuff. It could be saving your money and putting it in a damn mutual fund. I don't care. Like, do whatever you need to do, but put your money to work for you, because the government stimuluses ain't coming back anytime soon. No one's going to take care of you. Take care of your own business. Okay. So that's really all I'm going to say about that. What else do we want to get into before we jump into the charts?
I don't think I had too much more on the notes. I think it was just a lot of looking at the DXY, some BTC, and then talking about some of the traditional markets, just looking at some history, stuff that we always go over. So let's just jump into let's go in the traditional markets first.
Okay.
All right, I'm going to start with the Dow. Let me pull this up real quick. Ooh. And again, we were talking about, you know, how I was saying 45% is a possibility, in my opinion. When I look at this, we have pretty much since 2009 just been in a huge upward trend, right? The only time I see a major pullback is right here, and that was the COVID crash. And when we look at, let's pull up, this is 2007, 2008. All right, so let's pull the high to the low from there, sit down to there. That's 53% drop that we got from the Great Recession, 2008, when the markets dropped that week of September into the very bottom. Now let's go to 2000. That's over here. Yeah, right here. So from the dot-com bubble crash, we got right here to there. It's right there. It's about 61%. So 61% drop that we saw from there. Or my bad. Let's see. My bad. It's about 40% drop. 40% drop from there. Okay. So necessarily, we've seen some pretty good moves to the downside where, you know, when we do enter a recession, and that was a mild recession in 2000. It wasn't necessarily one that's lasted very long, but we still saw a huge amount of downward pressure.
Go ahead and look at 2008 real quick. That one is,
this one's pretty.
That's a doozy.
But that's also why they call it the Great Recession too, because millions of people across the world were absolutely unemployed. Housing market collapsed. You know, banks were just getting, I don't know. It sucked. It was a bad time. I just remember just playing Modern Warfare 2 on the PS3, and then just, I don't know, shitting my pants. But anyways, when I look at those two numbers and then I look at 2000, like, those are considerable drops. And we have to think about why those drops happened. Obviously, the dot-com bubble, there was tons of tech stocks that were just absolutely overvalued. And then everything was being pushed into Y2K. So tons of people were obviously hoping that they could solve Y2K, that nothing bad would ever happen. Once they realized that it was a big nothing burger, there's nothing to worry about, then obviously there was like, okay, this is a perfect time to sell because everything's super overvalued. So we saw a huge crash. Obviously that we were going into a recession at that point anyways. So we saw that. And then we go into 2008 and we just saw tons of, the housing market was absolutely screwed. People were just giving subprime loans out like crazy. People were defaulting on them, foreclosures, tons of stuff like that. But now we're at a place where we have consumer debt and we have inflation. And inflation looks like it's going to spike. I don't care what anyone says. Inflation already has spiked. It's going to go higher. And, you know, the Fed obviously dropped the ball on that one multiple times throughout this entire.
And here's the thing. It doesn't even need to spike incredibly hard to scare the shit out of the market.
Right.
Like,
yeah.
It doesn't need to go back up to like 8% to scare the market. It could pump, back to like 6.8 or 7. And that's enough to start to price in more interest hikes and for those hikes to stay up for longer. So like, It's really, it almost feels like a lot of the good stuff, like the best case scenarios are priced in. And I don't know if that's 100% the case. I'm not an expert here, but that's just the feeling I get from market sentiment is like everything, like we've priced in best case scenarios. And like recently when inflation has been going down, it's like 1 to 0.3 of a point each reading. And God forbid we get to spike up like 0.4 of a point. Like the market is going to panic in a big way because it's going to realize that it's gotten too frothy. I mean, the amount that a lot of these stocks have gone up so far this year is obscene. Some of these stocks are trading at all-time highs. Like McDonald's is trading at an all-time high. What? I get it. It's like cheap food, and if we're in this economy, people need their McNuggets. But man, seeing some of these shares trade at all-time highs does not feel right.
Yeah, I mean, again, I'll say it one more time: Bed Bath and Beyond. I don't know who the hell is going looking for Christopher Walken trying to find that universal remote, but it's not Adam Sandler and it's nobody else. Bed Bath and Beyond is just trading. That is like a 100% AMC meme stock. So usually that happens when there's a top. I'm not gonna say anything other than that, but it just seems a little foo to me. When I look at this though, and we talk about the recessions that we had in 2000, 2008, and then we look at how much we pumped from 2009, around the time you bought Nvidia, all the way to what? Again, the COVID crash is an absolute anomaly because money printer just pushed everything up even further. So this was an absolute blow off top if you want to look at it from a macro point. But this is the BS I want to point out. You're going to tell me that after all those years, and I get there's tons of money in here. There's tons of people at the Dow, NASDAQ, and S&P have all grown considerably as people enter the market. But you're telling me that from this top, we only came down 22%. And then from there, we came right back 19%. So we're only down like 2% from that entire swing. That's like that trade. That's ridiculous. That doesn't make any sense to me, especially when we have inflation that's going to spike again at whatever levels it does. We have tons of people that are pretty much just lining up to get unemployed. Once these rates go up, business is going to slow down. Some people aren't going to spend money. They can't afford to spend money because they are $1 trillion worth of consumer debt right now. These businesses aren't going to keep these people around. They're going to do what they do best. They're going to get rid of them. They're going to do stock buybacks when the market's at the bottom, and then they're going to make a ton of money on the way up. That's what it happens every time. And, if there's tons of people unemployed, people who bought Bitcoin right now before they got unemployed are going to be getting rid of it. Bought, stocks, they're going to be getting rid of it. They're going to get out before they have absolutely nothing. So that's just one thing to be looking at. And when I see these levels, it's like, okay, so would it make sense for us to go back down to where we crashed to? Sure, but I don't buy that. Is this level around here probably the most reasonable? Yeah, 22% drop, 26.5, 25, 26.6 would make sense. But again, this all began with COVID. I wouldn't be surprised if it all ended with COVID. And that's where we end up going to from here, current level, down to here, 47% for the Dow. Does it have to go there? Absolutely not. But when I see support, maybe between this level right here at 21.8 and then down here at what is that 18.2. It's it's a pretty good range, but I think within that range there's a good chance that we find some support there. I don't think that the support up here is going to hold, especially if it's like something similar to what we saw in September 2008. Like that was just nonstop selling, and I wouldn't be surprised because of how long we're kidding ourselves that we aren't in a recession, that we aren't in a bear market, that we're in a bull market. The amount of liquidity that's being expensed right now, this is the last of retail dollars. I mean, people cannot afford $1,000 expense. Like 57% of Americans can't afford $1,000 expense. You're leveraging credit. Anything that you're buying, any assets you're buying, that's 100% your personal income. That's your side cash. I don't understand how they're going to be able to prop this up when, big money's not coming in. So that's just one thing I've noticed. I think that a lot of these traditional stocks are going to crash hard. And I think it's just a waiting game to see when it finally goes. Again, it just feels like we're waiting for that final domino to topple, and then just retail is just going to get destroyed.
Yeah, the recession is coming. Like, I don't think this soft landing. And I agree with Ace right here. Like retail, it's not like I know some people who started like kind of asking about crypto because that's what happens when it starts to pump. Is people want to get in. Like that's usually a top signal.
Yeah.
And if they do get in right now, they're going to get wrecked. And then as soon as things start to go down, they're just going to panic sell. Yep. So I don't think at any point, at any point, like, are we going to see a sustained run on this? It's been a nice little relief rally for the last, 7-8 weeks. And relief rallies, they can go 3-4 months, but eventually they come to an end if on a macro standpoint, things haven't gotten better. And, middle of next month will be right around 3 months of a potential relief rally. And it's just, there's too much data that's going to come out that I think is going to be negative, and that's what I'm placing my bets on right now.
Absolutely. I couldn't agree more. I just want to look at the S&P real quick because, and the other end, I'll look at NASDAQ. But for where we are currently to this level down here, this orange line, that's 23.51. That'd be about a 43% drop. And we got two touches off that. Again, could we potentially find some support down here? Sure. But if everything decides to go south, this seems like everything lines up with both the 200 EMA down here, 50, finding some resistance, some support off these levels. I wouldn't be surprised to get a triple bottom where we just hit that thing 3 times, and then maybe that primes us for the next bull run. But for the most part, I think that's going to probably be the worst case scenario. And I'm not saying that it's unlikely because I think it's possible, but it's going here to here. That's 44% drop. That brings us to the COVID lows. And just looks like we're going to see some negative price action. I think a lot of what we are currently looking at was some relief rally. I don't see this being, we're coming down from here to there. That's a 35% drop. So maybe NASDAQ took a little bit of a hit. But again, if one thing goes, everything goes. It's just a matter of liquidity, and I don't see there being a lot of it moving forward after this rally ends.
Yep, for sure. Let's did you want to talk about NASDAQ at all, or do you want to jump into the DXY and some crypto tokens?
No, I just wanted to show the levels for the NASDAQ and the S&P, but we're all good. Like I said, everything's pretty much going down to I don't know, hell. But let's look at the DXY. So yeah, this is the monthly. I don't want that. I do want this though. I want the daily. And I'm not going to lie to you. This is overbought. This is overvalued. And you found rejection here on the 200 EMA on the daily. Most likely you're going to get rejected and come down. We've been trading kind of like in this parallel channel. Not necessarily a parallel channel because this is a bull flag right here. It's lower lows and lower highs. Then we broke up to the upside. But we did find resistance here. And that's also, it's just weird. The 200 EMA and this white line, which has been support for us in the past, has turned into resistance again. And we got rejected off of it. We can see that the candle came straight down. I think that we're going to have to bring the stochastic RSI down a little bit. Again, could this pair up nicely with the middle of March when we get all that data? Absolutely. But let's look at the weekly.
You also saw that ChatGPT predicted a market crash on March 15th, right?
Oh, yeah, absolutely. That's, I'm not going to fight with a robot. I'll probably lose that battle. But
The robots are taking over, dude. Like, I'm a little bit scared, but
if it ain't the robots, it's the UFOs. You know what I mean? This is like Scary Movie 3. I hope the aliens are nice. That's a great movie. But anyways, we bounced off this, and around the weekly, we found some.
Not about a great movie, but
it's an amazing one, especially when how they say hello, goodbye, all that stuff. It's amazing.
It is. Anyways. It is a movie. I don't know if I would use the term great, but keep going.
Oh, it's the best one of them all. All right, it's DXY. We're coming up. We hit the 50 is resistance. We're between here, this 103.69 level and the 50-day moving average on the weekly. Again, the weekly has been moving up fast, and again, we actually made some pretty significant push to the upside. Does that mean that we are gonna, come down as soon as we get up there? Not necessarily. I think that we could stay overbought for a period of time, like just like we still stayed oversold for the longest. Like this came down from September. Where was it? September was the peak of it. October we were overbought, and then from October all the way till I don't know, right here, January this year, we were just nonstop selling. Like you can see some green candles in there, but let's be honest, that's just downward trend. So I think that we could stay overbought for a period of time. Could this just be overbought and maybe pushing up a little bit? Yeah, absolutely. I think a lot of what the DXY is going to move on is data, which is the opposite of what I've said for a lot of crypto and stuff like that. I think the DXY is going to be like the nail in the coffin for a lot of risk assets once they do start moving, just because obviously if the dollar is being valued more, people are having more trust in, the dollar than risk assets, then people are not going to necessarily, people are just naturally the DXY is going to pump while risk assets take a dump. The dollar is valued more than, the worth of something that can go up or down. But right now we are seeing it get it's overbought on the daily. The weekly, it looks like it's going to the upside. I think that we're going to stay overbought for a period of time, but I don't think that it's going to trade technically after we get the information in March. I think that that's going to be the catalyst for pushing it forward. I think sentiment and a lot of big money is just necessarily going to be sidelines completely in cash, or they're going to, just take their bets on the DXY. And then you're just going to see risk assets, everything from the NASDAQ to Bitcoin, Cardano, Solana. I always got to throw Cardano in there somehow, but everything's just going to.
I know you do.
Everything's just going to get absolutely wrecked. But again, I don't have a crystal ball as to when that's going to happen. I just think that right now we're trading technically, so we have to, assume that we're going to come back on the daily. The weekly looks like it's going to keep progressing to the upside, but where would we find support? I don't know. Maybe somewhere like right around here. We got a little wick down here.
I love that. I love that Ace is starting to toss the conspiracy theories into the chat. We got the UFO, we got UFOs, we got balloons, we got train derailments. I mean, man, what a time to be alive.
That's why I threw Atlas in our thumbnail. He's holding up the world, but pretty soon his knees are going to give out. That man's going to drop the ball, and we're all going to get screwed. But tons of opportunity when he does. Anyways, DXY. Same old. We're pushing up. A few days, we're going to need to retrace a little bit back down. But I think that's even on the monthly, if we look at the monthly real quick, we are completely oversold. So I wouldn't be surprised that if we close this month, we just start making our progression to the upside. This is also a huge macro bullish indicator, because once we're in the oversold, we are still primed to go to the upside. And also, if we look at the monthly, here's the red line. That's the 50 moving average, and this is the 200 moving average. We're still well above it, so there's still plenty of progression to the upside as long as the stochastic RSI holds true and we begin to push up over the next few months. But again, I think a lot of that's going to be based on sentiment after we realize that CPI has spiked and there are going to be tons more rates.
Yeah, one thing I forgot to update on earlier, looking at CME. Their projection for the rate hike in March, the momentum continues to be toward 50 basis points. It's now 79%, 25 basis point, 21%, 50 basis point. You may think, well, it's still a 4-to-1 chance. That number was significantly worse back at the end of the last Fed meeting. What happened? A 0% chance of a 50 basis point hike, and now it's 21%. So we've left the station as far as no rate hike this month. We've probably left the station as well for that in May. So, we need to get prepared for a few more big rate hikes, and just accepting the fact that maybe the Fed has just completely lost the battle.
Oh yeah, 100%. I think that Jerome Powell and all the Feds across from like Dallas to Minnesota, they need to be, subscribing to FLOLiO and watching our shows every Monday and Thursday, because
I really don't understand how we haven't been put on, the open market, like the FOMC yet. Like, what is this? Come on. Like some guy wearing a beanie and another guy over, like the guy with a good head of hair. Like, let's go.
Oh, thank you. I know that should be enough to get us on the Fed, and just raise everything by 200 basis points, just end inflation real quick. We'll cut rates right after everyone loses their job. We'll buy real low and we'll sell real high, and this is the way we'll live our lives.
I'm just envisioning the scene from Step Brothers where they show up for the job interviews, just you and me showing up for the Fed. We're here to fuck shit up, and then just like right into a montage.
Well, I think they're fucking
walking into Jay Powell's office, throwing papers up in the air.
Oh my gosh! Again, another great movie. I just don't want to be wearing a tuxedo.
Okay, let's keep it rolling.
All right. All right, let's just go to Bitcoin, man. I had a bad joke, but I'm not going to say it. All right, let's go here.
Okay.
All right, let's look at the monthly. Obviously, the monthly closes in a few days, or next week, actually. And we are right here at this 25.28. To me, this looks like a double top. We hit this. Obviously, the thing that worries me is this stochastic RSI. There is tons of room to the upside. However, sentiment in the space can change real fast, and manipulation can change price real fast. And, we saw it at the end of the bull run last time. We weren't oversold on the stochastic RSI, but that was the top. And the price momentum just shot downwards from 68K, 69K, whatever it was, all the way down to 47K over the next few months. So even though, I obviously trade technically, I do understand that sentiment can change real fast. And then, like I said, rates continue. The dollar gets strong. This stuff can get rejected real fast. One thing I do want to say about Bitcoin, I don't have the chart here, but there is a heat map where you can pretty much tell where a lot of the liquidity stands. And there's $20 billion worth of open positions around 20K. So that means anyone who's longing here, their liquidation level is around 20K. That is probably the hottest spot on that map. So that pretty much tells me that liquidity is probably going to get tapped at that level. So I don't know if we're going to, go above 25K or not. I think that it's a pretty good chance that we're just going to go straight to, what do you call it? We're going to probably just liquidate as we've liquidated tons of shorts. But for right now, I think that we are going to see some good liquidation levels at that 20K level. Let me just pull up this as well right here on the daily. The daily, you can see that we've been trading in this parallel channel. Like it's just been, top, bottom, top. We're not even making the top right now because this level has been so strong, this 25,280. With stochastic RSI is extremely overbought. We have this, obviously we have this cross right here with the 50s going above the 200. That's considered a golden cross. However, I don't necessarily buy that. This is the daily and we're overbought, and we see that the volumes are coming down from this level to this level. It's not a huge amount of volume that's coming down because obviously we see an increase here, but for the most part, I think that this is losing steam with each rejection that we're getting. We saw a nasty drop yesterday, actually. Like it was at the close, we shot down to this level right here, 23,896 or something like that. And then we shot right back up. So obviously tons of people were probably just shorting and they just did a quick liquidation, pushed the price up. And then the last one I just want to show is the weekly. Now look at the weekly. We obviously, well, maybe it's this chart. Yeah, it's this chart. This is the one. This is the USD. We got the death cross right here. And we are finding resistance right here on the 200 EMA. We have the stochastic RSI, which is overbought. Very similar to what we're seeing on the daily. This is pretty much just telling me that we've made a double top on the monthly, on the weekly, and on the daily, and we're just running out of steam. Again, I don't know how long this narrative can hold up or who's going to keep keeping this price pushed up because I don't see anyone buying. I don't see huge volume. When I look at this right here, this volume's fairly small compared to this price that we saw push up here. We have this sell volume that we got here, obviously sell. Low volume in a bull market doesn't make a lot of sense to me. And I think this is just also, I'm not going to say it because I'm not giving you financial advice, but this is telling me top 100% that, a lot of the money that was coming into the market is kind of leaving. And if anything is coming in, it's just being swapped for coin pretty much, or coin for dollar. So someone is just selling, it's distribution pretty much.
Yep, 100%. Completely agree with you there. Let's get into ETH and then we can kind of wrap it up. I don't know if there's anything on the ETH chart that is noteworthy. Feels like we're just kind of, Bitcoin has seen that resistance at 25K. ETH is seeing it at 1,700. Feels like they're just kind of moving together right now. But if there's anything noteworthy, we can definitely talk about it.
Yeah, I mean, I think you're absolutely right. We're at 1699 right now. But again, volumes are extremely low for Ethereum. I really wish TradingView would get rid of these little dots down here because I really don't care about the articles. I don't need to read their stuff to do technical analysis. But this volume down here is extremely low. We're coming down while price is going up. That's bearish divergence, first off. We're getting to the overbought on the daily. I think we're overbought already on the weekly. Yeah, we're completely overbought on the weekly. We're trading in between the 200 and the 50. I think, again, I said that this was a fake out here. We came below it, and then obviously we liquidated everyone to the upside. So that could just tell you that, we're still liquidating everyone in the space, that if there was a lot of money and there's true money in this space, we would be going towards higher levels to make more money, but we're just not seeing the buying volume as here because this volume shot up, and look how small this green volume is. That's literally nothing comparative to this red candle that we saw shoot all the way down. So little volume and the price shot up a ton. That's obviously probably the DXY, a little bit of that coming down. But I think this is an absolute fake out on the weekly. Let's see the monthly real quick. I don't know if there's anything noteworthy.
Yeah, there's also this from Ace, which is I've been seeing a ton of, is the narrative that like everyone in Asia is going to start dumping money into the market here over the summer. And I don't know how much of that I truly believe.
I don't
know how much of like, the money over there is, You know, the people who had wanted to be investing in crypto, could they have already been doing it? Probably in one form or another. How much, you know, we've had economic struggles. They've had them over there too. Like, so
Yeah.
I don't know a whole, like, I know next to nothing about the Asian economy, but I'm just going off of the fact, like, they've had COVID restrictions far longer than the US. Do the people over there have the amount of excess funds to dump into crypto? I don't know. I would lean toward no, but I would love to see some research on that.
Let's put it this way: there's a lot of smart people in this world, and I am more certain that there's tons of geniuses in Asia when it comes to the innovation, companies and stuff like that that are over there. I know that they don't do this KYC BS. They're completely anonymous. I think that they've already have money if they really wanted to. Similar to how people over here who can't buy coins that are listed in the US can buy stuff if they are smart about it. I don't think that's a bullish narrative at all. If anything, I am the complete opposite. I think that the Asian market is going to be the one that sells. I think the Asian market is going to be the reason that we wake up one day and Bitcoin's at 20K, or the Dow is 15% down. It's like, what happened? Well, the Asian market sold while you were sleeping. That's honestly, I think there's more money over there than there is here. I think that we are struggling more than they are, and ultimately, it's a matter of which market's going to go down first. I don't buy that narrative one bit.
Yeah, agreed.
When I look at it,
let's wrap it up on ETH. Yeah, no, you're good.
So I think this is complete BS. I think that this is an absolute fake out. When I look at the monthly, we didn't even get to these levels up here. If we had hit up here 1787, not saying that it's impossible, because it's what it's $89 away. If we were to hit that and get rejected at that level, I mean, that's just a triple top. It can't get any more resistance level than that. And then I think that you're just coming straight down. You're going to go below that 200 moving average on the weekly, on the daily. But yeah, for Ethereum, I think a lot of this is just pretty much just trapping tons of people. I still think that this is going to lead tons of liquidations going forward, just because people are super bullish on ETH. But for the most part, I don't know. I don't buy into this. I think that we are coming down. This is just very topish, and there's just not a lot of indicators I'm seeing that tell me, we're in a bull market. That monthly might be the only thing, because the stochastic RSI is so low. But when I see the amount of volume that we're seeing and how much resistance we're finding at these levels, and then how they line up back to where we were in August, that just tells me that we're double tapping that top. That's resistance, and we're going to come down to push to the downside. Paired with the macro, anyone's game. That's a falling knife, and I think that's going down to the 600s. But again, it really depends on how bad this plays out over the next few months. So that's all I got for all the crypto stuff. Nothing else on the charts that I'm seeing.
Okay. We're going to wrap it up for the day. Thank you, everybody, for being here. We had some new viewers, I believe. I appreciate that. We do this show, the Crypto Focus Show, the Market Focus Show, Monday and Thursday. We do an NFT show Tuesday and Friday. So we'd love to see you come back for more of our content. We're not quite the best in the business yet, but we're getting there. So that'll do it. Once again, please hit that like button, subscribe to our channel for more content. For Kevin, for the team at FLOLiO, I am Jeremy. Have an awesome week, everybody. We'll see you back here on Thursday.
Everyone.